Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to talk about how a financial audit can help your organization. To clarify, I want to say that we are talking about a financial audit conducted by an independent CPA firm. That audit is designed to express an opinion on the financial statements, that those statements fairly represent the financial operations of the organization and that they comply with generally accepted accounting principles. Now, these audits are not designed to detect fraud, but if the auditors do detect fraud, they have an ethical responsibility to report that to the board of directors or report that at the highest level. We are not talking about like an IRS audit or some other type of compliance audit that sometimes we become subject to, maybe sales tax or even a grant compliance audit by a grantor. So to discuss the financial audit a little bit further, what happens as a result of the audit? Well, you get a report, and the report includes the auditor's opinion, what they found. It includes our statement of financial position, our statement of activities, our cash flow statement, and notes that are required by generally accepted accounting principles. Now, these notes are going to give additional information that the numbers just don't give. For example, do you pay rent to a related party? Well, that's something that we have to disclose in the notes, and even the dollar amount of rent that we would pay. Now, when deciding if you want or are required to have a financial audit, there are some places that you need to go. First, check your bylaws. Some founders have determined and set forth in the bylaws that your organization will be subject to a periodic financial audit by an independent CPA. So check those bylaws and see if you have a self-imposed audit requirement. In addition to self-imposed audit requirements, there are governmental requirements. There's 26 states that have audit requirements for nonprofit organizations. Now, these requirements vary across states, but they tend to fall within a trigger point for organizations based on gross receipts. If your gross receipts are between $500,000 and $1 million, and you're in one of those 26 states, you need to check your state regulations if you have an audit requirement or not. In addition to state requirements, the federal government requires that if you receive federal money of $750,000 or more, that you're required to have an independent financial audit. And they actually call it the Single Audit Act is the act that requires that. You have to be careful because you may have several different federal grants that add up to $750,000, or the federal money may be even funneled through the state. So you have to make sure that you know the source of those governmental funds. And when put all together, does your organization receive $750,000 or more? If you do, you have to have a single audit. There are special steps that the auditor must comply with in order to qualify as a single audit. So you want to make sure that you have an auditor who's experienced with these types of audits. Another reason that you may want a financial audit is for grant application submissions. Some grantors, depending on the size of the grant, will require it. Some will request one if you have it. It always shows the grantor that we're doing our best to be fiscally responsible by having this audit done. And then finally, we may have some loan covenants, whether it's a bank or some sort of other lender, that as we've contractually obligated ourselves to have a financial audit in order to comply with terms of that agreement. So what if we're not required? Why would we still want to have a financial audit? They can be costly. I want to talk about a few advantages of the financial audits. The first is under a topic that I call increased transparency. With the audit report, having that done and having that ability for the funders to get that information about your organization, especially the information that's in the notes and your gross receipts and talking about your programs over and above what they can see in the Form 990, can boost their confidence in how seriously you take your fiscal responsibility. Watchdog organizations will also look to see if you have an audit. Charity Navigator, GuideStar may rank you higher in their rating system if they know that you have a financial audit prepared on a regular basis. The second advantage is regular accountability, being held to a higher standard for your financial controls and having reporting that is improved and consistently improving over time. Both of these controls and reporting accuracy over time, I can tell you with these financial audits, that really does happen. The first year, you may be really afraid and concerned, but the auditors are really wonderful people, having been one, are wonderful people who really are there to help you in making your organization a better place because they don't want to do an opinion that's adverse. And then finally, an advantage is finding opportunities for improvement. In addition to the financial statement report and the opinion, auditors prepare a report for our board of directors where they talk about any weaknesses that they found in our internal control system, our processes, or our reporting, and ways that we can make improvements. Many auditors, too, will give us a heads up of what's going on in the industry. What are the changes in generally accepted accounting principles that we're going to have to be ready for? And some auditors even provide us with some benchmarking data so that we can see where we are compared to organizations of our size and type. Now, there are other types of audits other than a financial audit, and we kind of alluded to that a little bit earlier. They generally tend to be external or internal. So other types of external audits is just auditing a segment or maybe a grant that you've taken on and finished and completed. We may just have audits of those parts of the organization, not of the organization as a whole. And those are what we call limited scope audits. We can also have audits just of our internal control processes, where the auditors will look at and test our internal controls and make recommendations for improvement there. And then finally, if necessary, if we think there's been some defalcation, we can bring in an independent CPA and have a fraud audit conducted. So those are the other types of external audits that can happen. And you say, why would I have an internal audit? Internal audits are great. We use the same steps that the external auditors would do. We're using our own team members, and we're conducting those same sort of reviews of our processes, how our information is flowing from our actual transactions to reporting, to look for the places where we can improve our processes, find some efficiencies. Just a great way to take a step back and say, how can we improve our organization? Now, getting back to the financial audit, as we said before, those financial auditors are hired by us and paid by us. So when we're looking for an independent CPA to do that financial audit, we want to prepare a request for proposal, and we want to get several proposals and compare them when we make our decision. One of the things you want to look at is the firm's experience in your industry, because even within nonprofit, we have various different types of organizations. Some are very grant heavy, some are very federal grant heavy, some are membership organizations, and they all operate slightly differently. And you want to make sure that the audit is going to be within your budget. Depending upon your organization size and complexity, audits can range from $10,000 to $20,000 per audit. If you're a really big organization, it could be even more than that. So what if you're not ready for an audit, or you think an audit is too expensive? You're not stuck. There are other levels of service that can be performed by an accountant, some by an independent CPA, that help you get to the point where you're ready for an audit or give you some of the advantages that having an audit would give you. The first, and is the next level, like below an audit, is in level of service, is called a review. Now that review still has to be conducted by an independent CPA, but the cost of those reviews are like 40 to 60% of the audit. And the reason for that is the review, we're not doing the in-depth testing that we would do in an audit. The goal of a review is to make the determination that the financial statements are in compliance with generally accepted accounting principles. It's not an examination of our internal controls. It relies heavily on statistical analysis. And the review report will state that they have not performed an audit and do not express an opinion on the financial statements, just that those financial statements do not require any material modifications. The next step below a review is a compilation. Now, a compilation is an accountant, not necessarily a CPA, and definitely doesn't have to be an independent CPA, is taking your financial information and putting it in a format that is consistent with GAAP requirements. There's no audit. There's sometimes very little review of the numbers behind the information. So if things don't make sense, then there's going to be some examination there in looking at things a little bit in depth. So there's no assurances given with this. It really is just taking the information and putting it in a financial statement format. The advantage of this is it gets those reports out there that you have in a GAAP compliant format, and the cost is significantly less. It can run from $500 to $5,000, depending upon, again, the size and complexity of your organization. Additionally, you can have notes to the financial statements in your compilation report, or you can decide not to include them, and that will have an effect on the price of your compilation report. But you do need to have a trained person reviewing those records to provide that. And they will help you with recommendations to get you into some GAAP compliant reporting processes. So there are several types of audits out there, and there are even other levels of service that you can get to help you with your organization. Not all organizations are required to have audits, but all organizations can benefit from some level of service, whether it's an audit, a review, or a compilation. Audits are great in that they provide grantors and donors and watchdog organizations with greater assurance that your organization is a good investment for their dollars, that you are fiscally responsible, that systems are in place to protect your assets, that the funds are going to your mission, and a way to compare your organization with other organizations that are in competition for their dollars. They're great for our board of directors, and they provide our board of directors for assurance that the policies and procedures are being followed, that our financial statements fairly represent the activities of the organization, and that if fraud is detected, it will be reported directly to them. And then finally, for our management team, an audit provides us with recommendations to make improvements in our internal control systems. They help us to keep up to date with generally accepted accounting principle requirement changes, and they help us keep up to date with trends in our industry or even our niche. I want to thank you for joining us today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.